This is the conclusion to these lessons that we're having right now. We've gone through the candlestick types, we've gone through the market types and everything. So this is a conclusion of these lessons. So I want to go through some of the most important lessons that we went through, just to give it a final touch so that you understand what you need to focus on when it comes to being a price action trader. So basically, the first thing is the time frames and analysis. So remember, we talk about the top-down analysis when it comes to time frames, where you start analyzing on a bigger time frame before you take your trades on your actual time frame that you're trading, right? So as price action traders, our main focus should be on the 1 hour, the 4 hour, and the daily chart. The time frame, that's the time frames that we basically use. That's where we should have our main focus on, because smaller time frames usually generate a lot of false signals due to a lot of noise that is just going on those on those time frames. So looking at the 1 minute time frame is very, very noisy, so a lot of false signals will be shown there. Even using all these candlestick patterns that we've shown you, and some of other technical tools where you draw your trend lines, your support and resistance, if you do it on a smaller time frame, it'll generate a lot of false signals. So we don't recommend that you trade those. So focus on your 1 hour, your 4 hour, the daily and the weekly time frames. Those are the more reliable ones. Remember, the bigger the time frame, the more powerful the confirmation signal that you're getting is. So top-down analysis is very key and helps us trade high probability setups. So for example, if you want to trade 4 hours chart, check your weekly chart, and then come down to your daily chart. And then if you see that both of them align with your 4 hours chart, what is going on the 4 hours chart, then along with other confirmations, you can make your trading decisions on this 4 hour time frame. But basically, it starts with the weekly, go down to the daily, and then come back to the 4 hour to see if they all align, or they're all saying bullish or they're all bearish, right? And then when you come to your 4 hour chart, if you're seeing that it's starting to form that confirmation that is together with the other two time frames, then all you have to do is just to wait for that confirmation, right? The confirmation sign to say maybe you set a resistance. Once you see a pullback, then you say, okay, cool, this is the time to enter. Or once you see a pin bar, or some of the candlesticks that we spoke of, then there'll be a final confirmation, right? Support and resistance are very important. So that's another thing that we went through. Support and resistance, very, very key points on the market. If trading on a 4 hours chart, for example, first spot there's a resistance on the weekly chart, then you will know what will happen on the 4 hours chart when the price reaches this important turning points, right? So once you have your support and resistance on the weekly chart, and then you go back to your 4 hours chart, then you check once the market reaches these points, you basically know whether it's going to retest this level, it's going to bounce off, is this going to have an impulse move, is this going to be the end of an impulse move, beginning of a retracement. So you'll be able to see that once you have your support and resistance sorted out from the weekly, but then you are using it on your 4 hours chart, right? The market structure, remember we said we have three main market structures. So we have the trending market, we have the ranging, and then the choppy market. So remember, we say we stay away from the choppy market, we don't touch that at all. But basically the weekly analysis will help us to identify if the market is in an uptrend or it's in a downtrend, or maybe it's just in a ranging, or if it's a choppy market, which we do not trade at all. So the aim is to know what the big investors are doing so that we can follow them on the smaller time frames, which are using our price action strategies that we have learned and the other technical tools that we've gone through, right? Another important thing is the previous candle on the weekly chart. So the previous candle on the weekly chart will tell us what is happening during a week, or what has been happening in the previous week, and what we can expect what we can expect in the new coming week. So it provides us with valuable information about the future market move. When you identify these points, when you identify all these points that we've mentioned using the weekly chart, you can now move down to your daily chart or the 4 hour chart and try to gather some information such as the market conditions, so that you can see if it's aligned to the bigger time frames and the weekly time frame, so that you can try to look for trading opportunities, right? So market condition, what is the market doing on the 4 hour time frame, and is it trading up or down, ranging, or is it choppy? So you have to figure that out using the techniques that we've shown you. And then most important key levels on the 4 hour or the daily time frame, this could be the support, resistance, supply, and demand areas. Also, you can use the trend lines to determine these key levels as well on your 4 hour or the daily time frame, the time frame that you want to place your trades on. And then you also need to look at the price action signal. So it can be a candlestick pattern that will provide you a signal to buy or sell the market. This can be a pin bar, an inside bar, or engulfing bar, and the rest of the candles that we spoke of in the previous lessons, right? So these are your signals, your final signals to tell you, okay, there's a confirmation you can take this trade or not, right? Let's take a look at the trading strategies and techniques. So market trends. So now you know how to identify the market trend using multiple time frame analysis, which is the top-down analysis. Start from the top, going down. You know how to differentiate between trending markets and ranging market. You understand how each market moves, right? As we explained, the ranging, the trending, as well as the choppy market. So we explained how those look, how those market structures look, so that you get a better understanding of which price action strategies to use on each of these markets, right? So the levels, so the important levels, you learned how to draw support and resistance, how to draw trend lines, and this skill will help you to better enter the market in the right moment, in the right time. So remember what we said, you need to aim to enter in the beginning of an impulsive move and end at the end of that impulsive move, which is what our support and resistance as well as our trend lines will be able to help you figure out, so that you be able to better time those entry points. And then lastly, we have the signals. So with the signals, you've seen different candlestick patterns that we have shown you, that we're going through, and they describe the psychology or the reasons behind the forming of these candlesticks, what exactly is happening in the market during that time frames. So you basically have an understanding of the psychology behind the formations of these candlesticks. So there are three main aspects, they're very important. So the market trends, the level, the signal, which are what we use in our trading approach to make money in any financial market. So it doesn't matter what you're trading, is Forex or is indices, is cryptocurrencies. As long as you can figure out these three aspects in that market, you'll be able to make money out of that financial market, right? So the first thing to do when you open a chart is basically to ask yourself the following questions. So the first question: what is the market doing? Is it trending? Is it consolidating? Or is it a choppy market? So if it is trending, you know how to identify if it is an uptrend or downtrend. So in an uptrend, remember, we have higher highs and higher lows, and in a downtrend we have the lower highs and lower lows. We demonstrated how to see if it's a downtrend or an uptrend. And then if it is ranging, we see it trading horizontally between two boundaries, so between the support and resistance. But if it is a choppy market, well, you know that you have to close your charts and stay away for that day or for that specific time frame until the market starts to break out of that choppy market and starts to give you a proper direction, or at least start to trade in the ranging market, so between a support and resistance levels. The second question to ask yourself is, what are the most powerful levels in this market? So we're talking about your trend lines as well as your support and resistance levels. And then the third question to ask yourself is whether if the market is trending up or down, or is it simply ranging. So you will try to find the most important support and resistance on these charts. These levels are best zones where you can buy or sell the market. So remember, you have to plot this on the weekly chart or 4 hours chart, at least the bigger time frame, and then you try to capture the entries on the hours chart, on 1 hour's chart. But we also use the 15-minute chart to spot on the entries, right? To have those sniper entries if you want to go deeper into the entries. But it's only for entries, not necessarily for analyzing the trend lines and all that stuff. But if you want to get some sniper entries, I would say you can also take a look at the 15-minute chart for those very, very narrow entries right at the beginning of a trend. But at the same time, you'll be using the support and resistance that you've developed on the 4 hours chart or the weekly chart, as we recommend, and the daily charts. With the last question you should ask yourself is, what is the best signal to enter the market? So the best signal to enter the market means the right time to execute your trade. So this is when you see your confirmation, whether it's a candlestick pattern, is at the end of a reversal, is the beginning of an impulsive move in the direction of the trend. Remember, we only trade with the trend, we don't trade against it. That is what we mean by the best signal to enter the market, which is just the perfect timing for that entry. So I hope you understood everything here. So the next lesson, we're actually going to jump into what we call the pin bar candlestick pattern strategy. So we're going to explain a little bit more in detail how you can make use of this, because it's actually one of the most famous candlesticks widely used by most price action traders to determine reversal points in the market. So it's very, very important. So let's jump straight into that one.